You know, there are a lot of things we should know when we decide to invest our money. Sometimes we do it based on our favorite products or companies. Sometimes it's because of what we believe in. Richmond-based financial expert JB Bryan is here to talk about that. It's called socially responsible investing. Hi, JB. Good to see you.
It's good to be here, Cheryl. And this topic is extremely different.
It is different. And it's also called belief-based investing sometimes.
Yes.
And it's interesting because I know a lot of times when a child is born, people will give them like Disney stock or something like that because it's something that they believe in or something that they think is going to grow for them. Is that kind of what we're talking about?
It is very much like what we're talking about. And there may be some investors who their social responsibility may say that they don't like Disney and that they do would prefer to have something that did not have Disney in. A lot of social responsible investing is funds. It's exchange traded funds or mutual funds. Professional managers are involved in most cases because it takes so much research. So because of the research that's involved, the money managers would actually choose which stocks are in it. And it might say that we don't do a certain criteria. The criteria typically is ESG. It falls under, which stands for environmental, social, or corporate governance. So, and it will be based on some area in that, but it's just like there's no particular name for it. There's no clear definition of what social responsibility is because it depends on a person's personal opinion.
It's very individual.
Yes, indeed. And that's what makes this discussion so important because, Cheryl, actually, there's almost $9 trillion that are actually under professional management under social responsibility investing.
That's a lot of money.
$9
trillion.
So and I remember a couple of years ago when it was new.
Yeah, so why would someone decide to do this particular type of investing?
Really, it's because of their personal desire to make money. So money and financial desires is always the undercurrent, but they also want to do well and do good things while they're doing well. So they want to do a good thing, make a contribution to a corporation or support a corporation that is under their criteria of what being socially responsible is.
So that sounds great. And you started out by saying people want to make money. Do people make money doing this?
Very good point. Yes. And according to the research that has been done, there's a social responsibility forum report that was done and put out in 2016. And it actually shows that when you do research based on corporations that are socially responsible and they're showing a positive correlation between social responsibility and financial success for corporations. So there is a positive connection there, and that you can actually make money with these investments, but there's mixed returns. So I always suggest that you get professional advice and actually decide what your criteria is and allow the professional to assist you in looking at social responsible investments the same way you would as any other investment.
So as a professional, what kind of research would you have to do to make sure that you are fulfilling the desire of your client?
And that's a very good point because it can change. And when it comes to socially responsible investing, there's a huge emotional component in it. And the client can become very disappointed when the company lets them down, if they don't do what they feel that they should be socially responsible for. Say if they chose Disney, as you mentioned, and they put out a movie that they don't agree with. And so the client will feel personally disappointed that they didn't live up to their socially responsible criteria that they set in their mind. At the same time, the fund could be, the corporation or the stock or the fund could be selecting socially responsible investments, good corporations, but they don't give the client the return that they anticipated.
So up front, you've got to be honest and say, this is the criteria you want to fulfill for now, but it could change.
That's right. And there is the challenge there of meeting that social responsibility that you've given the corporation, and that corporation actually establishing or making the money that you want them to make, or it performing in the way that you want it to perform. So you have to be very particular and be well diversified. So you should ask anyone that's assisting you to make sure that you are diversified. You may limit yourself to just one or two investments and put a large percentage of your portfolio into investments because you feel they're socially responsible and you love those businesses, but you're maybe not diversified enough. So be very careful with that.
Because as we've learned by talking to you, diversification is key when it comes to investing.
And asset allocation. So we're talking mostly about stocks, but you're also, when you get in tune with your risk tolerance, you may not want to be heavily weighted in equities, in stocks. So you need to know that the other asset classes are there for you: bonds, cash, real estate as well.
So as with anything, you need to do some homework yourself and then maybe talk to a professional.
Homework is vital. Extensive research, and these investments can be expensive. They may have larger fees because there's a lot of homework to be done.
Something to look into as well. The fee percentages,
Yes.
That's always important too. Well,
Yes.
JB, thanks so much for joining us today.
Thank you.
Interesting topic. Didn't know a lot about this. JB Bryan offers free money seminars every Wednesday at noon and on select Saturday mornings at 10 o'clock. You do need to pre-register. And if you'd like to find out more, we'll put a link on our website at WTVR.com/VTM.